What up, investors? What up, traders? Ken here from Dyslexic Investor, and we're looking at basically 4 minutes until the open here on this Thursday morning, and SPY being slightly down. Last couple days we've dropped a couple percentages, really failing at the 618 percentile move from the swing high to swing low here. That basically coincides with the 200 exponential moving average for indicating signs of we failed a double top here, looking for potentially going lower, seeing the initial first line of resistance around 278, lack of better words, and then basically 278 to 277 could be some very light support, and then potentially further down we're going to be looking at support around 263. That's on the downside. Upside is going to be resistance again around that 295 level, which we're needing to break out if the bulls want to win this case. So just a couple articles I wanted to share with you today, kind of to highlight some of the stuff here. So David Tepper, so this is a guy who has been in the hedge fund business for 3 decades. He is also, you might know him as the owner of the Carolina Panther football team, and he's saying that this is the second most overvalued stock market that he's seen since '99. But again, he made that statement 2 days ago, and then the market dropped about 4% exactly. Let's see exactly how much we actually dropped from 2 days ago. He said it here. So if we took a swing high to swing low, we're looking at, and of course I needed to zoom out just a little bit more. You're going to hear the bell open up here in a second. You're going to hear the big ding, 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 ding. So about 5%. He said that about 5% ago. Still indicating for potential lack of the liquidity is not a problem, but the sense of just overvaluations for a lot of companies. So looking at this, you can watch, I'll put this link in the description. His interview is pretty fantastic. Really smart guy, to listen to what he says. I don't think he's just trying to run out there, give the alarm, and make people run for the fences. But that being said, looking at basically the PE ratio here, it's getting pretty high up there. So that's what he's meaning by the evaluation of the standard Poor's average company within the Standards and Poor's. So basically being a little over 20 has been a very toppy pattern for potential further downside resistance, and then indicating that the swing that we've had in the market was a much greater upswing that he projected or thought, but now seeing for potential more downside movement. Again, he doesn't have a crystal ball. I don't have a crystal ball. We just kind of have to sit on our hands and wait to see on what happens next, on what levels could be tested and so forth. So I'm actually going to put an alert out here. The bell is literally about to open in 38 seconds. Another great little article here too, I'll put it in the description below. This is basically stock market is flashing some warning signs, aka looking for a potential downside. I like this little bullet point they put here saying technical analysts are watching and waiting for Thursday's action. There's the market open. Let's go ahead and take a looky-loo what's going on here. Okay, we definitely opened lower. We kind of broke this downward candle again, looking for initial support here. Nothing too violent to go down. We could see a bounce here as well. Again, we just have to wait and see. Going back to this article here, looking at Thursday's actions. Again, we want to look for how iTrade is on the close of the market to see how what we need to do and move forward. Looking at the overall lot of support. Again, this is where the overhead resistance coming in, what we talked about, in the down trough with the potential what they call a bear bounce, and this is basically a bull trap where everyone thinks that it's potentially going to go higher. Everyone's buying in, getting all those Robinhood spy calls with no commissions, and then it just kind of could fall out of the sky. Again, I don't have a crystal ball, neither does anyone else in the market that I know of, but that being said, just being super mindful out there, being very careful and selective on not just doing YOLO bets and placing bets that are the most advised. You see here we are seeing a little bit of a positivity and some bulls coming in here to try to buy this up. This could be a nice little push higher, again, to 282. But if that fails, we could be seeing a little bit more of a downside risk. It could bounce up. Again, looking for the initial guides of potentially we want the ticker to close by the end of the day above the 21, which is around 283 right now. And then potentially that's the positive or bull case. For the bear case, again, it could close lower on that ticker or close below the 34, which is this little dotted orange line here. Looking forth, that being said, there was another interesting thing that I shared actually to my Patreon subscription folks this morning, where I shared them basically a monthly chart. So this is a monthly, I hit the wrong button. This is a monthly chart of the S&P 500. Again, this is 0809 over here, and this is the bull run as we know it basically since then. And again, the way I trade and the technical analysis that we offer here is basically using the 21 exponential moving average as being the average range or the guideline for a bull trend or bear trend. With the 5 and the 8 being a little bit more higher momentum side of things. As you can see here, we can kind of just zoom in here that the 5 and 8 since like 2011 has been very well above the 21. You can kind of see here writing it up. Now we're jumping to 16. Again, the white and purple line are well above the 21 a lot, but now we're seeing some early signs of a potential divergence from that. We did see the white cross through the pink line, which is the 8 EMA on the monthly chart. Again, this is a monthly chart, so this chart takes forever to play out. It's a whole full month, so whatever, 38, 28 days depending on a month, this is going to take some time to play out. That being said, we are getting the white line again, the 5 exponential moving average crossing potentially into the 21. And that honestly hasn't happened in a really long time. And the last time that kind of happened was basically in this area here. That was in late 2010, after the overall financial stuff crisis and something trying to come out of it. It could be somewhat here, looking at basically of April of 2008. Where we had actually which is more significant, and what we trade here is when the 8 EMA crosses through the 21, signaling some potential stronger downside. And this is just something to be mindful about. I'm not ringing the bell, I'm not throwing the alarms, I'm not saying I need evac immediately and need help here, but potentially ringing and looking at potential downside once this EMAs get too close to the 21, and once they actually physically cross, we could be seeing some potential downsides, and we'll just have to see what goes from there. Again, guys, thank you so much for checking out the channel, and if you enjoy all this stuff, don't forget to like and subscribe. We do have a awesome Discord server that we operate and just share trading ideas. We trade memes and things like that, and then also, like I mentioned before, we have a Patreon as well. We just kind of share charts. I share some of the watch lists that I use. I'm going to be posting some just videos directly to Patreon discussing some market trends and things like that. But again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.